Hey, what's up, guys? My name's Charlie, and I want to help you build wealth in real estate. Real estate can be a phenomenal investment vehicle if you know what you're doing. The problem is it's really risky and can be extremely confusing. So I'm here to demystify real estate, and I'm here to help you build wealth. Hey, guys, I am back. All right, so let's talk about real estate compared to some other investment opportunities that are out there. Everyone's heard of stocks, mutual funds, bonds. Some people like cash. There's a lot of other stuff like crypto out there. We're not going to get into all that. That's just too much. But what I do want to look at is the real estate on the left side, and then you have stocks, bonds, cash. So when we look at real estate is a hard asset. That it's a tangible asset. You can live in it. You can touch it. You can feel it. You can't do that with stocks or bonds. That's all that is just paper, right? A lot of times that's even on like Fidelity or E-Trade or something like that. It's in your IRA, your 401k. It's just something that you can't play with. You can't do anything with it, right? So push comes to shove, you can't really use it. The only thing you can do is sell it. And then you have cash or in savings. Sure, I guess you can feel the coins. You can hold the dollars in your wallet. That's great. I don't know if anyone uses cash anymore. Everyone uses cards. But real estate is a hard asset. So the next benefit is the high cash yield. One of the benefits of real estate is the potential to make a very high cash yield, a very high return on your investments. You can do that to some degree with stocks and to a lesser degree with bonds. You can't do that with cash or savings. If cash is sitting in a bank account, you're losing money. Sure, you gain a little bit of interest from the bank. That is teeny tiny. That's not even a 1% return, whereas stocks on average are going to be about a 7% return year over year. That does not include financial planners, opening accounts, all the fees, commissions that go with stocks. And then you have bonds. Bonds aren't going to typically return 7%. They're going to return something much lower. They are more stable than stocks. So it's less risk, less return with bonds. But then when you have real estate, there is, depending on your business plan, there's so many different plans out there, so many different strategies and asset classes to invest in. You can do so much with it. And one of the things that that real estate offers is a high cash yield. And, you know, there's, like I said, there's a lot of different ways you could do that. Some of that would be where you passively invest. Sometimes you buy a property, you fix it up, you flip it, you sell it. There's a lot of potential to make a lot of money in real estate. So the next thing we're going to look at is leverage. Leverage is one of my favorite benefits about real estate. So leverage, and you can kind of think about it this way. If you were ever a kid on the playground and you were sitting on a seesaw and you were on the very end of that and someone bigger sat on the other side, you're going to go up, right? They had a lot of leverage. With leverage, what that means is when you go and you buy a property, whether that's a single family home, a mobile home park, a skyscraper, whatever it is, you are using, most people use a mortgage. And so you are already getting leverage. You know, depending on the property, if you are, if you served in the military, thank you for your service, you could use the VA loan. A lot of times you put nothing down or maybe only $1,000 down, but you could buy a property that may be $200,000 and the bank is going to finance the rest of that. So in that case, you're leveraging 99.5% of that purchase. And the benefit is, you know, all the gains that you receive, that's yours. That's not the bank's. You pay them the mortgage, the monthly payment with the principal and interest. You don't get leverage with bonds or with cash. You can get it in stocks. Some online brokerages will let you open up like a margin account where you're basically borrowing their money to buy more stocks. You're paying a super high interest rate with that. And so that's why that's in yellow. Real estate, tons of leverage. Stocks, there can be. Bonds, cash, there's no leverage whatsoever. The next one is a tax advantage. We're not going to get into all of the benefits of real estate with taxes, but I do want to talk about two of the main ones. One is depreciation. Depreciation is basically, it's a paper loss. So the government says a property, a residential property, a home that you live in, depreciates over, I think it's 27 and a half years, and commercial property depreciates over, I think it's 39 years or so. So what they do is they take that and they say, okay, if the property is worth $100,000 and it's a single family home, then you're getting about a little over 3% depreciation each year in that property. And that's great. That goes to wear and tear. Now you don't actually lose that money, but that lowers your taxes. Phenomenal tax benefit. A lot of wealthy investors buy real estate just to offset their income, so they pay less in taxes. There's also a 1031 exchange where you can defer taxes. There's a lot of stipulations with that, not getting into that, but a lot of benefits with taxes for real estate. Stocks, you don't have one. So when you sell the stock, you're paying taxes, you're paying capital gains on the money that you made. Bonds has some tax advantages, but not many. And obviously holding cash, there's no tax advantage. And then finally, the equity buildup. This is what I love, and I kind of talked about it earlier. But as the property over time appreciates, so the property goes up in value, and you pay your monthly mortgage every month, what happens when you pay your monthly mortgage, part of that goes to principal, that's the amount you owe, and the other part goes to interest. That's the amount that the bank or the financial institution is charging you to borrow their money. So every month, your principal goes down a little bit, but your mortgage stays the same. So not only is your mortgage going down, but your home or your property is appreciating. So that creates this nice equity buildup. It's not uncommon for people to own a home for a few years, sell it, and after a few years make 50,000, make 100,000, make more than that. And then additionally, stocks, there is some equity buildup with that. As a stock or a company goes up in value, your stock goes up in value. So you're making money when you sell it. And then bonds and cash, there's no equity buildup there. It is very, very, you can see cash is something that's not a good investment whatsoever. All you do is you lose money, and you lose it quick, especially with inflation. Inflation makes the cost of goods and services more expensive. So your buying power goes down. I hope you like this video comparing real estate to other investments, not getting into crypto, not going to get into, I know some people buy wine or buy art. We're not getting into anything like that. Really just wanted to compare the common investment opportunities with real estate. Like I said, you can build wealth in real estate, and there is a lot of people that have made millions of dollars through real estate. Thanks for watching.